Hi, this is Kyle Markham with International Futures Group, a division of EFG Group in Chicago. I want to give you some comments for today's grain trade, today being Wednesday, August the 19th. Let's start out with corn. Obviously, the only real news that we have right now is the Pro Farmer Tour that you're hearing about. Obviously, some of the numbers you saw coming out of Indiana, Ohio, making people really question the USDA and their yield. Obviously, that happens pretty much no matter the USDA report. Consistently, you have people saying they're wrong. As far as I'm concerned, let's just trade what the market is showing us. If you want to argue, oftentimes that could be expensive. So right now, corn is just really trading on those reports. We made an effort to get up there to 385 in the December contract. We didn't really get there today, and we sold off a little bit in the close. I don't think crude oil helped the situation. Considering that broke again today. I don't think that the soybeans were really helpful, and the wheat market has no friends, led by the Kansas City. Did actually take out that, I think, the 91 level in the December contract today. So corn's going to wait on the yield reports. We need closes over 385, 388 on the chart for us to have something that we can work on as far as upside levels, but now we're just waiting on news. Wheat market, real briefly, as you know, obviously, it hasn't really been able to do anything much since the report. Kansas City, Chicago trades into 7 under today. Unfortunately, I think that's a popular spec trade. Obviously, it is not working. It was trading even in one of my videos only a couple of weeks ago. Now it's 7 under. So until Kansas City shows some kind of even stability, it's hard to think there's a lot of upside in the Chicago. Obviously, Chicago's given up quite a bit to corn in the last few sessions, but there's not a particular reason to be long. Soybeans today, it was interesting. They sold them down last night. They initially tried to rally this morning, sold them again, and we're new lows underneath $9. What's interesting is when you're looking at the meal market, meal is actually considerably stronger relative to soybeans. If you think about the last time soybeans were at $9, meal was considerably lower than it is now. So obviously that's a function of the demand, as well as, they're crushing a lot of beans for meal. Soybean oil basically is on a death march to zero, it appears. Obviously when they're buying the meal, they're selling the oil against it pretty consistently. So for now, we're going to wait on more news about the beans, but the problem, we've had these rains come in. The timing of them could not be better, and you are hearing people say, my bean crop was just made. And when you're hearing that, when you're looking at the radar, beans are going to continue to go lower. So that's all I have for today. Again, this is Kyle with International Futures Group in Chicago. If you have any questions, don't hesitate to give us a call.